Stuart, even the analysts are struggling to filter through these earnings and cut through the noise. How difficult is it going to be going into next week with Citi, Bank of America, Goldman Sachs, Morgan Stanley all coming through as well?
I mean, I think we'll have the same problem with, across the banking sector and really across all sectors, even non-financial. What we've looked for really is, rather than looking at some of the fundamentals on our side, we really focus on the technicals. So one of the things that we've, looked at in the past is the fact that in Q4, financials tend to be one of the worst performing sectors after the beginning of earnings season. They actually tend to perform quite well in Qs 1 through 3 in the first couple weeks of earnings season, but surprisingly, there seems to be a consistent underperformance in Q4 all the way back to 1992, and that's something that we're focused on.
The underperformance that I think everyone's focused on is the trading division.
Yes.
When is that going to pick up, Lisa?
Well, I mean, arguably you could see more of a pickup this year. Everyone is expecting volatility to pick up. This is a pretty big decline. Just to put this into perspective, it was a 34% decline in fixed income trading revenues in particular. That's versus an expectation of Wall Street analysts of a 19% decline. If you strip out tax-related effects, it was a 27% decline. So even if you strip out one-time effects, it still was well higher than a lot of the estimates. The drop was bigger. So you have to wonder, what does this mean for all the smaller firms? What does this mean for Goldman Sachs and Morgan Stanley that rely more heavily on fixed income trading? Raises a lot of questions.
We've talked about the client mix. If this was Goldman Sachs' set of numbers, we'd be saying, well, this is the institutional stuff. This is because volatility is low. But this is JP Morgan. It's a more wholesome mix of the corporate and the institutional client. What's going to be the read across for next week, Alison?
Well, it was interesting, and we sort of noticed yesterday that the decline in estimates heading into earnings. So we saw the biggest decline at Deutsche Bank, who we know flagged a 22% overall decline in overall trading revenue last Friday. But Citigroup and Goldman numbers also coming into the earnings. So I think that showed that people were getting more pessimistic coming into the earnings. But obviously this might take things down a notch lower. Again, it is all about the run rate. It is about volatility. I think the results would matter less if we did sort of see some kind of pickup on the horizon. But we've been hitting sort of record lows across different asset classes. And I guess the negative thing is normally when you see these low volatility periods, the expectation is we could hit high volatility, so bad volatility before we get to sort of that good Goldilocks type of volatility.
Well, let's